Is Bitcoin's recent price surge a launchpad or a lure for a bull trap? That's the question on everybody's mind. Hey guys, it's Keith Allen, and the end of the week is here. Let's just dive in and see if we can figure out whether this is indeed a sustainable move developing, or if we're headed for another fake out, or potentially a nasty bull trap. So, as we delve into this week's analysis, the question really is on everybody's mind: how's this going to play out? Right? That's always the question on everybody's mind. So, I think that high time frames, especially with what we've been seeing here lately, are super important. But I also think that there's some value in looking at the lower time frames, because we can gain some insight and pick up some clues of how things might be developing as we try and really read the tea leaves to see if this is indeed going to develop into a better move. After we had a big fat rate cut on Wednesday, and then Thursday we had cooler than expected jobless numbers. Those were not really directly related to the recent rate cut, because it takes time for those to work their way through the system. However, you could argue that this rate cut, at least 25 basis points of it were telegraphed back in August, and that was baked in. And so maybe this is the result of that. But of course, the Fed caught up with, if it was a 25 basis point baked in back in August, and then another 25 baked in here, we had a 50 basis point cut on Wednesday, and you could do the math any way you want. Bottom line is, we had a fat rate cut on Wednesday. The market seemed to like it. TradFi initially pulled back, but had a big day yesterday, and Bitcoin did as well. And probably the most important thing that happened was clearing the 21-week moving average. But I would caution you that it's not how we start, it's how we finish. And we have a weekly close coming up on Sunday, and that's something that we all really need to keep an eye on. So let's start by sharing a chart of the a candle chart on the daily time frame, or the weekly time frame, I should say. And also a reminder before we take the deep dive: do me a favor, if you haven't done so already and you like the streams, smash all the buttons, hit the like, hit the share a comment for sure. And I love reading those and engage with those comments. By the way, the live chat is open on YouTube, so happy to have you comment here and join into the analysis. So without further ado, we'll go for a quick glimpse of fire charts, since I have that open, and we'll come back to this. But you can see some rejection happening here from really, we had a wick up to 64K. And so now we have more ask liquidity coming down to push price down, and we have some bid liquidity here. We'll get into the order book and order flow data here in a bit, but I wanted to start here on the candle chart. As you can see, price, and really we're hovering right at this level, at the 21-week moving average. This has been strong support, technical support, for quite some time. We lost it back in June, reclaimed it for a couple of weeks, but none of these were full candle bodies, right? And so that's always a sign to me that that things aren't as strong as they may seem, right? I want to see full candles. When you have full candle bodies printing out like we had, from the original breakout back in October of last year, we never looked back here. So breaking down from this level and failing to hold it is always a concern. So this is really a critical test here, to get a close above this 21-week moving average, and then next week print another full candle above this to put us in position for a real sustainable rally. So on this time frame, you can see, and I want to get specific here with where price is. I'm looking right now on Bitstamp. And price is going to vary slightly, depending on what exchange you're on. But the 21-week moving average sits at 62,711, and price right now is at 62,898. So we are hovering above it, but it's obviously getting challenged here. And of course, the weekend, another Wild West crypto weekend could present itself and make things interesting here. But at the end of the day, or end of the week, I should say, we need to see a close above this 21 week moving average. Otherwise, that's an indication that we're not quite ready yet. So, not necessarily an indication that it's over. For it to be over, we need to break through support levels down here and down here to get confirmation of that. But at the moment, we're still range bound until we sustainably hold above this 21 week moving average. It might be that we grind for an extended period of time, and with the November election coming up, that's something to consider. Right? Is the real move going to present itself before that happens? Well, that remains to be seen. So I want to drill down. While we're looking at time frames, we're going to go super high, right? And on the monthly, which isn't super high, but that's pretty high. On the monthly, as you can see, we've had a series of lower lows, and we need to start printing higher highs. Is this indeed the rock bottom for Bitcoin? And so on a monthly basis, we're going to want to see, a close above a green close, and preferably a close that leads us to a higher high would be significant. Likewise, when we zoom out to the quarterly chart, we do have a quarterly close coming up here at the end of the month, and that also lends itself to a situation where we'd like to see not only a green close but a higher high if possible. Where was that? The high on the monthly, 72,756. So, above that 72,750 range is where we'd like to see the quarterly close. Also important to see what kind of candle forms here. Right now we have just a razor thin doji right here. If this turns into a doji hammer, that would be interesting to me. Likewise, things break down. That's also not what we want to see. A doji hammer would be a higher high would be amazing. A doji hammer would allude to potentially the next month or months or quarter, I should say. We're on the quarterly, moving higher. And so, of course, we'll also watch trend precognition for signals to develop at that quarterly close. On the monthly, same set of circumstances, always looking for new signals. Incidentally, as you can see, the quarterly still trending down, but at the close, we could see this revert, or we're going to see an extension of this to come downward. So that's something that we'll watch here on the A1 slope line. On the monthly, we're currently trending up. And so if this trend continues, then we could see a new signal here, a new long signal here at the monthly open. Likewise, we could see a reversion where the A1 slope line clips away, and that obviously has bearish implications. So back to where we sit now, right? The weekly, we're dealing with this 21-week moving average. If we now zoom in, and obviously support down here at the 50-week moving average, and then the double bottom here, really are technical support levels that are in focus at the moment. Losing this brings us down to the trend line, which is something that I don't think anybody wants to see. Well, there's some bears out there that want to see that, but for sure, right? So now zooming into the daily, is it a coincidence that rejection came from the 200-day moving average? No, it is not, I would say. And this is also kind of telling, right? 200-day moving average, similarly to the 21-week moving average, has served as really for a long time has been support. And since we've lost it back in, when was this? Early August, right? That August breakdown. We've not been able to regain that. And so coming off of this double bottom, that would be good to see. Reclaiming the 200-day moving average, equally as important as reclaiming the 21-week moving average. You get both of those under your belt, and then you got something to be excited about. And so that would give us a good opportunity to go after this 2021 mid-cycle top, right? Those are very, very close, right? The The 21 week was at 62,750, and the 200 day is at 63,950. So they're a ways apart, but this is, again, another technical barrier to this mid-cycle top, which is just shy of 65K. And so we can flip over real quickly to fire charts and look at where resistance is, and support for that matter. And you can see that it is stacked above. Resistance is stacked above this, where that 200-day moving average is. We've taken out a lot of this, right, with that wick to 64 and change this morning. But you see some replenishment here. And so this is trying to push price down to get filled lower. Obviously, some strong resistance up here through 65. If we can clear 65, I think it's a relatively quick path back up to the 69-70K range, which also has been super strong resistance. In fact, the strongest resistance since we revisited those levels. Of course, 69K being the 2021 top. And as you can see, we've had countless interactions with that level that have all resulted in rejections and breakdowns. And so, again, building off of each success, building off of each level that gets reclaimed, puts us in position to go after the next level. And I do think this is a level by level game at this stage. So I want to take it down even further, and I'm gonna clear out the trend precognition because it's going to get noisy when I move into even a lower time frame. Another technical pattern potentially forming here. What I see is a inverse head and shoulders pattern, and I can highlight those here with a little bit of artwork, which I suck at, by the way, but I'm happy to do it for you guys. Let's do this. Let's just copy that sucker and replace it, right? So boom. And that would be the head. And that, this would be a shoulder. And this would be a shoulder. And so, for this to play out, and technically, I guess, this might be close enough to the pin for some. I could see a situation where we make it up to this mid-cycle top, this 2021 mid-cycle top around 65K, just shy of 65K, to be honest, and then see this further breakdown. It might be happening right here, but I think there's a chance we can nose up to this level and then see a test of support. And that test of support could come in the form of obviously the key moving averages, but also from the prior double bottom, potentially forming a triple bottom here, which would be a nice launch pad for the next leg up. So those are things to be watching for. Obviously, a breakdown beyond this level brings the lower low into focus. Nobody wants to see a lower low. Lower low brings us to the trend line, and a breakthrough of the trend line really could mean the end of the run here. And again, this isn't something I expect to see before the election, unless we have a major catalyst. So, those black swans are hovering the pond all the time. Certainly can't rule them out, but I would say let's keep an eye on things and see if that actually comes into play. But clear, we're seeing a rejection at the moment from that 200-day moving average, and that is something to be mindful of. Is it going to hold? Is the 100 going to catch it here? That remains to be seen. So that's what I'm watching here as we head into the weekend. Now we'll take another look at the order book. As I mentioned, we do have strong resistance, but look, now a support wall coming in here, trying to absorb this and slow things down here as bulls have been selling a bit from the top. If we look at the daily time frame, we can see, I got to refresh here. On the daily, we can see that we have seen some selling after peaking out here a little bit, but this happens all the time, right? These, especially these purple whales are they're gonna trade the market, right? They are buying dips, they're selling rips. My internet connection is super slow. I'm not sure why it's taking so long to reload. Um, oop, not even in the right spot. So I would say again that's something that we need to keep watching to see if more bid liquidity comes in. We have seen some bids move up, which is good to see. But the fact that there's a bit of selling going on tells me that there's some profit taking happening, and I will look to see that when buying resumes. Yeah, there you go. That explains it. I'll look to see when buying resumes, and that's when I'll potentially add to my position. Real quickly, we talked about the other day. We talked about the uh, jobless report, and that was something that gave us a little bit of a boost here, right? So I'm now looking ahead into next week. Let's go back to this week, and we can see that obviously we had that Fed announcement. We have a terminal target now in place. Could take us more than a year to get there, and so I think as we look at this economic news as it comes out, the good news does equal good news at this point. And so we did have a much cooler than expected jobless report, which is good to see. Same with the 4-week average, and that is something. Unemployment is certainly top of mind for Fed watchers and economists who are worried about a recession. So there's obviously warning signs in both directions. And that's something that we have to just keep watching to see if things are going to develop more favorably. All right, so I got this refreshed here, and you can see that we do have some bids moving up here above 60K here at 61K level here at the moment, and so that's a positive sign that we've seen more coming in above this 55K level that was really mid-range support here on the daily. As I was mentioning, we've seen these purple whales selling along with other classes, but really small money buying here. And this could be especially this green could be influenced with a whale controlled TWAP bot, just using smaller money to kind of hide their intentions. But look at this now. It's an easy move because all this liquidity has been cleared out. It's an easy move to the upside. And so we'll have to watch to see if ask liquidity continues to come down to hammer this, or if this is a trap. And I would say because of the rejections we're having on the technicals, and because we have more ask liquidity coming down, things are shaping up for an interesting weekend. But if bulls can at least, keep this bid liquidity up here above 61K, even above 60K, then that mitigates or minimizes some of the downside potential out of this. Liquidity, as we always say, liquidity dampens volatility. So watching where liquidity is and where it isn't is important to get a take on how things can move from here. So at the moment, yeah, we could potentially see a move up here because this liquidity has been cleared out. We're seeing just tiny incremental buying here from whales. That's kind of non-committal in my opinion. So it's not significant enough to get me excited at the moment. But again, I'm watching it closely, as should you, as we move through the week. And by the way, and see, so that was a little trappy, a little bit of a trap here, right? Because you see how ask liquidity just moved into place here to prevent that from just rocketing up. Because it's so thin here, it would take very little to push price up. So they just put, not a lot, 3 million and change, just to slow things down and potentially trigger some more selling. Um, you know, this is an opportunity. Whether you're looking to short, whether you're looking to long, you've really got to be careful that you don't get caught in one of these traps. Be sure and manage your risk tightly here, and if especially if you're short, be prepared to get squeezed at least to 65K, if not higher. And likewise on the downside. you're kind of in a risky zone right here. I'm looking for more substantial support. You can see at least down at the 61K level is stronger. Of course, we all want to be buying in those low to mid 50s. Whether we get that opportunity again remains to be seen. Obviously, if we had that rejection, um, and this inverse head and shoulders plays out, there is a chance that we get down here. And so, yeah, I've got some bids placed here just in case. But in the meantime, I'm still watching very, very closely to see how things develop and will develop through the weekend and beyond. Going to leave it right there, guys. Again, if you like the streams, do me a favor and smash all the buttons. If you're interested in the products, and by the way, we partnered with our friends at the Kingfisher. If you're not familiar, these guys have some awesome, awesome data, trading data, and liquidation wraps seem to be one of the favorites among the market. And gosh, this just changed because I looked at this not too long ago, and it looks like we're seeing looks like some shorts had just recently closed, because I looked at this a little bit earlier this morning, and I think we had more up here. And so interesting to see this dynamic shifting, which means that these leverage longs are now at risk. You're not seeing a lot of leverage up here on the short side here just yet. So maybe we'll start to see these build. Maybe we're going to get another surge up there. Have to watch and see. But if you want to take advantage of this partnership deal, we have teamed up to put together an awesome opportunity for you to score 2 best-in-class toolkits from Material Indicators and from the Kingfisher. The deal is very simple. You subscribe to a Premium Plus package, which is a 1-year package of all of our premium tools at Material Indicators. You're going to get 15 months for the price of 12. That's 3 months free. And same situation over at the Kingfisher. Sign up for a year and you're going to get 3 months free. Links are in the description. Hope that helps you guys out and gives you a chance to get to arm yourselves with best-in-class tools to navigate this market, because I'm not going to lie, it's getting harder and harder to navigate here. So do yourself a favor. Take advantage of this limited time offer before it goes away. Going to leave it right there, guys. Hope everybody has a fantastic weekend. Hope you spend a little time away from screens doing something you love with the people you love. And as always, trade safe, my friends.